Thank you very much.
Thank you.
Okay.
Done.
Hello. Let's start with you introducing yourself, please.
Hey, hi, I'm Senni. I'm currently the CEO of MMS, M-DAQ Market Solutions, entity of M-DAQ Global. I have more than 35 years experience in the foreign exchange market, witnessing from manual execution to algorithm execution, and have gone through many financial crises. Yeah.
What in your experience are the key challenges that businesses face?
The current market scenario, business actually faced with a lot of uncertainty. The cost due to tariff, transaction trade restrictions, supply chain delay, and shortages, a higher cost due to inflation, all this affects the profit margin. And on top of that, with the FX volatility actually gone up, the fluctuation of the foreign exchange rate actually put more pressure on the profit margin.
So what are the risks that businesses are faced with today, and why should they care about this?
Well, I think most companies should look into hedging their currency risk. I think mainly because point number one is to mitigate the currency risk. The foreign exchange rate actually fluctuates due to geographical politics, the interest rate shift, the central bank policy, and also the economic data. So if all this, hedging via financial instruments like forwards, options, and even swaps allow them to lock in the rate for future transaction. It's also to avoid unexpected foreign exchange loss. And of course, point number two, to stabilize cash flow and budgeting. So hedging ensures predictable cash flow and also the revenue in the home currencies. So it's very critical for company with cross-border trades. And of course, the last point I would think about is the profit margin protection. So a small percentage move in the foreign exchange might actually cause a profitable export business into a loss. So I would advise all the currency risk to be hedged.
So tell us more about it. How can a business go about hedging their risk today?
Businesses can actually hedge the future transaction via, as I mentioned, forward, option, or swaps. So, of course, the more straightforward one would be a forward. They are able to hedge either a receivable or a payment in the future. So, for example, an Indonesian export company is to be paid in US dollars with the Indonesian rupiah in a month's time, can actually lock the rate today for a 1 month transaction and settlement. Yeah. And then some companies with obligations to loan for 1 year could hedge a monthly payment, collections of dollars to be paid. For example, the home currency is in euro and the loans repayment is in US dollars. It could hedge a buy dollar, sell euro on an every month basis. Yeah, up to a year. And that will give clarity to operationally, I think, the budgeting, and give clarity to the expenses as well.
Excellent. So how does M-DAQ help businesses achieve this?
So we have the UI platform called Forex Pro, which is user-friendly, able to help user choose the currency pair exposure, the tenor, even broken dates to match the receivable and the payments. Via that, you're able to choose the currency pair, assuming what we just mentioned, the dollar rupiah, a 1 month dollar rupiah to purchase dollars, sell rupiah in a month's time with the contract date. And on the day itself, there will be an actual transaction where dollars will be paid to you based on the rate that's locked in a month ago. Please do call us, have a chat, so that we can actually advise to solve your pain point, have a customizable position for your business needs. Yeah.